Hello, everyone, and welcome to another episode of How to Sell Your Vision. As always, I'm Moti Elkaim, and I'm your host of this podcast series. We are here to bring you successful founders, investors, VC partners who have helped to raise money and people who raised money themselves and can give you a lot of insight on how to raise successfully in today's market. And boy, do we have an interesting episode coming in because today I'm with David Mandel. Now, David is not your typical investor because he actually started as a serial entrepreneur, turned super angel, invested in over 500 companies in his career, and now he's the managing partner at Emerging Ventures Capital, the VC. And without further ado, I'd like to welcome David Mandel. David, thank you so much for being with us today.
Yep, Moti, thank you so much for that introduction. I'm happy to be here.
Beautiful, beautiful. So, David, you've seen a lot in your years as an entrepreneur, in your years as an investor. Let's start with the hardest question and then we'll go down to the easier ones. Let's say you're running into a founder and he's about to pitch his company to an investor, and you're only allowed to give that founder one tip of advice in preparation for his pitch. What would that be?
Focus on execution. How are you getting shit done?
Got it. What does that mean? Is that in terms of the go-to-market, how you're executing the product, the team? What does that mean, focus on execution?
Yeah. Well, it can mean a lot of different things depending on what stage you're at and what industry you're in and so forth. To me, as an investor, at the end of the day, it always boils down to execution. If I have to distill what I'm looking for to one thing, it's execution. It took me many years to realize that. I used to dance around and say, what are you looking for? What are you looking for? And after many years, I finally found one word that summarizes it, and it's execution. I'm looking for founders or teams that just get stuff done, and they're the ones who will at the end succeed. They, no matter what's thrown at them, they'll figure it out. To give you, anecdotally, I'll give you two extremes. I'll take two pitch decks. Here, I get one pitch deck, and it's a team of 12 people. They all look like serious professionals, probably in their 40s and 50s. And the deck says, we've spent the last 6 years and $10 million developing our IP and building a plan, and now we're raising another $10 million so we can build an MVP and go to market. Then there's another deck of three scrappy young guys who spent the last 6 months building an MVP, and now they're raising $1 million so that they can grow their ARR to $1.5 million in the next 12 months and then raise a big priced round. I'll tell you that deck A, I'll never take a meeting with. Deck B, I love.
Got it. So, it's all about the
and
hustle.
Obviously, yeah, those are two different, obviously extremes, and there's everything in between. But plan less, do more, build more with less, build quickly with less resources, less time, less money, less everything. Just get it done. I don't want to say the Elon Musk mentality because that's kind of overblown in some way, but really just do a lot with a little, or is always what I think every investor is always impressed. At least most investors that are early stage investors are impressed with that and are turned off by people who are taking too long. To say I've been working on this for 3 years and now is actually a negative. People, there's some founders who are afraid to say, "Oh, I just started this 6 months ago." They want to make it look like they're more mature already in the product, but in fact, I want to see what you got done, and the more you got done with less time shows me that you can continue to do that. You can continue. So my money will go a long way. If I give you a small check, you can do a lot with it. If you're going to need a big check and do a little, that's not a positive. The fact that you need $10 million to build your product is not a positive. If you can build your product with $500,000 and it's already an amazing product and you already got some Fortune 100 pilot programs live and or a beta with 100,000 users if it's a consumer, so whatever it is. That's amazing. It's like, wow, you just know how to get stuff done, and it gives me confidence that my money will go a long way with you. Whatever problems you have, you'll figure it out. You'll probably pivot 3 times, but you'll always figure it out, and you'll do it quickly, and you won't run out of money because you're just nimble and adaptive and what a startup needs.
Yeah, it's funny that you're saying it because it's so powerful. So many times I see founders coming in and they want my help with investor pitching, and when we go over the numbers, the finances, they say, "Oh, we are raising this money because we want to build a sales team and sell this product." And if you haven't sold this product, or if you don't have traction showing demand for this product without an investment,
Right?
you're not going to sell it with investment. You don't need the money to sell the product.
Exactly. And always got to
And
start with founder-led sales. If the founder is not willing to make the initial sales, then most investors won't like that.
so I love it because we spoke about the hustle, we spoke about the grind, because this is really, and squeezing the dollar. We want to see creative founders who can squeeze the dollar and maximize it. But in the early stages, a lot of founders are hearing that they cannot raise or they're not getting the investment because they don't have enough ARR or
Mhm.
they don't have enough traction.
Right?
Is that a smokescreen, or do investors really want to see that traction first?
Well, you need to find the investors that invest at the right stage for where you are. So I've settled nowadays on being mostly a seed stage investor and less so of a pre-seed stage. And so for me, for our fund anyway, that's essentially true. We look for solid early traction that is ready to scale. And that I'm saying that with the check I give you, which is part of a round, you're going to be able to scale to some solid metrics where you can raise a big priced round, whatever it's being called later, um, assuming a Series A, at a nice multiple from where we are today. So I need to see you hit some nice metrics. I need to see the ability to get there. And I really say I need 3 legs of the stool. I need to see that you can build it, that you can sell it, and that the right customers are willing to pay for it. That's me. That's where I am today. There's other investors that are happy to be pre-seed or even earlier, and they pride themselves on coming in super early and helping founders even build their MVP and get there. That's just not what I do. And I always say I would suck at running an accelerator program because those who have executed and actually deliver something, and I see them today, I look at them and say, if I would have looked at them 6 months ago, would I have invested in them? The answer is always no. They look like the least likely to succeed, but somehow they're the ones who got it done. And and I look at so I really can't tell. I would suck at trying to figure out based on a founder and an idea who's going to succeed and who's not. They have to prove it to me because I don't know how to judge at the earlier stage. I would You should probably do the opposite of what I think on those early. And yet, so my advice though, so find the right stage. But my real advice that I go back and tell uh, those who are too early is go to an accelerator, especially in these days now where it's harder to find investors. There's money's not chasing everybody anymore. Get in. There's a proliferation still of accelerators, and you do have to be a little careful because they're not all equal, uh, and some are scams. There's some out there, especially if you're searching on the internet, that are virtual, that are really just taking your money and not giving you anything in return. But there's a lot of very credible accelerator programs. Um, I've learned to appreciate them about 75 to 80% of what we wind up funding. It's less than 20% of what I look at, but it's more than 75% of our portfolio have been through some kind of accelerator program.
Really
Um,
interesting.
yeah. Usually before I invested, sometimes after I invested, and some have gone to multiple accelerators. And of course, there's Y Combinator, but they're not the only. If you can get in, go for it, because that aura, that halo of the YC brand over your head will follow you the rest of your life, even beyond this startup. Even if your startup eventually fails, but it will help definitely your odds of the startup not failing. But uh, there's 500 startups. There's Techstars. There's Alchemist. It's like I'm going to be up in San Francisco next week for Techstars. They're doing FounderCon. They do so much to support their startups. I just did um, investor office hours for Alchemist, another great program. And 500 Startups is a great program. They're having their global event somewhere now as well. And there's so many others. There's some regional ones, there are global ones, there are industry specific ones. Um,
And
there's a lot of corporate ones as well, sponsored by telecoms or by large banks. Like, Chase has one, Amazon has one, Nvidia has one. I mean, you name it.
it's
And
fine. You
there's
throw a rock and find
programs.
one. Yeah.
Yeah, in the food industry, there's tons. Depending whatever industry you're in, Amazon, there's incubators and accelerator programs that support startups, and so, some are even nonprofit where they don't even take equity and just want to support the ecosystem, and others are partnerships, but most do take some equity. And my general sense on that for any legitimate accelerator program, it's a no-brainer to accept their deal. The math is always in your favor. Don't worry about giving up. Oh, they're taking 7% equity. It's like, so what? You have now 93% of something that's worth 10 times more than it was yesterday. Uh,
So
it's
you
easy.
spoke about
It's easy math.
so you spoke about different types of ways to get funded in the early stages. For those who are going after the VCs, how would you recommend qualifying a VCs? How would you recommend finding the right VC?
Mhm,
And then what do you do when you get that feedback from the VC in case things go wrong?
mhm. Um, when you get a no from a VC, unfortunately, you hardly ever truly get the real answer. But I try to be as transparent as I can, and sometimes that backfires because then you just start a thread, and you're just like, why was I ever that specific in the first place? The more specific you are, the more you give them a way to fight back, and that's so there's a tendency for VCs to want to be general and generic in their answers, but also you got to look at it this way: it is not like applying for a loan, and if you qualify, you get it with a bank. This is very different. I'm a small VC and I still see more than 500 pitch decks a month, and I make one or two investments at most per month. So it's not like I'm going to invest in everything that meets a certain threshold. It's more
Right.
like we're looking for one gem. I look at it as like I'm looking for that one startup that I'm so excited about that I want to spend the next 10 years, I want to drop everything and spend the next 10 years of my life working on that. I want to partner with them and work on that for 10 years if I had to do one thing only the rest of my life or the next 10 years of my life, that would be it. And if I can't feel that way about a startup today, then I'm not even going to consider investing. And it's hard to get to that threshold. There's a lot of things where my answer is really that, this is just not that exciting to me. And founders don't understand that answer. Uh, and I, but I have no other way to say it. It's like, yeah, okay, you're doing something. It's kind of interesting, but I'm just not excited about it. You know, it's not anything tremendous. It's like I've seen 500 pitch decks this month, and many of them were a little more exciting than this, and I still didn't invest in them. So it's like I have to choose one out of five, and I don't have to choose one either. I have a limited amount of cash to deploy, and I have an almost unlimited stream of deals to look at. And and so it's not, and that's where, like, there's some that are clear no's and they're not venture backable, and that's, you know, and then and there's some that are way too early for whatever stage, and I say, okay, go to an accelerator or go here or go to angel groups because they'll do those kind of deals. There's those that aren't venture scalable. So they're probably not meant to raise venture capital because they're not going to have the growth curve that is needed for venture, and that's fine. There's a lot of great businesses that aren't meant to be venture backed. And whether you should
So
get a business loan, go to SBA, or whether you should go to an angel group and that have a different, because angels, and I am an angel and I'm also on the board at two angel groups, And it's a different requirement. They're okay with a business that will have a 5x return in 10 years and it's going to grow slow, but it's going to be safe. And they'll invest maybe even in a local cookie shop. That's a different profile. It doesn't have to be the exponential kind of growth curve. Uh, and those are easy to say, okay, you're not venture backable in my opinion, so I'm not going to invest in this. It's not, I don't think it's a good VC. So that knocks out a lot, and I can tell them that. But for majority of the, assuming that they already know they are venture backable and they're doing everything else right, VCs aren't going to invest in something that is mundane. It's being good enough doesn't cut it, unfortunately. Just being good enough, just having something, it's like, okay, I'm using AI to help this type of accountant do this process better. It's like, yeah, okay, whatever. I've seen 100 other process automation bots. What makes you special?
Right.
And on the other hand, I might get a team of three like genius PhDs taking some research they just worked on that they perfected and commercializing it, and it's going to change the world. It's like, which one am I going to invest in? And it's like, otherwise, they're like, okay, you're just another average person doing some using average technology to solve a so-so problem for a small. It's like, okay, whatever.
At the end of the day, it's interesting what you're saying because at the end of the day, someone needs to capture your attention first, right? They
Mhm.
need to capture your attention first. And I think that this is where most founders fail in their pitch decks and in their pitch. The understanding that you need to create excitement first. Now, not false excitement, you don't need fireworks, but you really need to understand why does that matter. And it's not about process automation, right? We don't need another, you know, tool that unify into it every single chat on the planet. It's something that is truly
Yeah,
provoking your imagination.
right. Yeah, and there are probably 100 new startups now just trying to do what you said, and they won't get my attention unless they're somehow doing it like 100 times better than everybody else.
Right.
If they say, I know you've seen 100 of these, and but ours is different. And look, we just built this, and we now have pilots with these corporate teams, and you know we have all these guys loving this and saying it's 10 times better than anything they've seen before. And it's like, okay, I want to look a little further and see if that's really, obviously, don't, it's got to be true. But if you really build something that's at least 10 times better than everybody else's, you'll get attention right away and you'll get tons of money. If you're building something kind of boring, then you're not going to get attention. Uh, I mean, boring can be good in the other way. There's things that are boring, like solving boring problems, but that are in demand and no one else is solving. That is a good thing. Um, and spending too much time talking about in the pitch, talking about a generic problem that all the VCs know about already, and claiming that you're revolutionizing it is a big turnoff, because we've seen, like you're saying, like saying, oh well, we have messages in 20 different places and it's so annoying, and if there's only a way to unify them, it's like there's 100 ways, there's 100 tools out there. So to say I'm revolution, you're not. You're one of a
You know,
hundred, and you should admit that. And if you're in denial and you're saying you have no competition, you're the only one who does this, then you lose credibility right away.
yeah, it's actually a red flag when I see a founder
Mhm.
coming in and say, "We revolutionize, we reinvent, we
Right.
reimagine, we redefine."
Yeah.
When everyone is
Right.
speaking the same lingo, then I know that they're not true to their passion. If they
Yeah.
need generic lingo to describe what it is that they're doing, then something is wrong.
Yeah. Unless it happens to be true, which is very, very rare. Very, very
Very rare.
rarely are they
Yes.
truly doing something completely different, revolutionary from everybody else. I saw one last week that got my attention, and I'm following up with, because they truly are. And I don't normally invest in biotech at all. I know no life sciences, but this was tech for biotech, and it was using AI, and it was three amazing postdoc researchers from an Ivy League that did all this research in the lab. They now licensed back. It's amazing without getting into details, but they're not doing biotech, they are licensing this technology to, and they already have three of the biggest, big pharma licensing this from them. So they have already contracted $1.5 million in ARR within 6 months of going live. Because the three big farmers got, because they're getting big pharma predictive results on what's going to work, so that they don't spend millions going down the path of something that's not going to work uh, with 93% better accuracy. And it's like, wow, they really are revolutionizing the way biotech is going to happen. And the fact that three big pharma signed multi-million-dollar contracts with them collectively, it's like, wow, that. So when you really are revolutionizing something, and then I say, well, where did that come from? And I realize that they're true geniuses and they invented something, and in their doctorate research, and then worked on it, and they came out with a niche way of using AI that no one else is doing. And
And,
and and
and
and they are smarter in that than anyone else in the world right now. They're the absolute cutting edge of that.
so
I'm
it's
excited.
interesting. So it's interesting because you opened the conversation with picking those three hustlers,
Hmm.
entrepreneurs over the,
Yep.
the fancy titles.
Right.
And you have a background in mathematics. You describe
Yep.
yourself as a logical person, but I hear you always going to the point that you invest in people at the end. So there is an emotional trigger that
Oh,
is
it's
saying,
execution. It's still the execution. If it
yeah,
was just the research and they wanted, so most of the time I see them, like you said, coming, oh, we have the research and we spent all this time on it and now we want to commercialize it and we're raising this big round so we can hire a team and try to commercialize it. I have no interest.
right.
But when in 6 months from incorporating a company and deciding to commercialize it, they did that on their own. They somehow, using their industry
The
contacts,
attention
went
of big
out.
pharma.
They
Yeah,
got the big farmer, got not only pilots, but got contracts. There's already one signed contract and two others that are paid pilots that convert the contracts that will be worth more than $1 million already initially. It's like, wow, okay, you got my attention. You can build it and you can sell it, and the right customers are willing to pay for it. It's all three of my marks. And on
yeah.
top of that, if you guys happen to be geniuses and have something unique that's changing lives and gonna
Nice add-on to have.
maybe help us cure cancer, if we're gonna be part of what's curing cancer better, it's like I love it. I'm saving the world at the same time. So,
That's
uh,
brilliant.
I love it. I got excited. It's like, wow, I have to meet these guys. I have to get involved in this. It's just amazing. Even though I usually have no interest in biotech because I don't understand. Life sciences is my weakness. Um, so,
And
I get 20 people a week or more telling me they're curing cancer, and they're all MD PhDs, and they're all geniuses, but they're obviously not all going to succeed, and it's a hard path, and I can't tell them apart. So I can't invest in any of them because I don't have the brain to tell them apart. I have no expertise in life sciences, and I don't have a partner who does. And maybe in the next life somewhere, I'll partner with someone that's retiring from Amgen or something that is an MD PhD researcher that can tell them apart. But at this point, I have to turn down all life. I don't do medical devices. I don't do life sciences, biotech of any kind, because I don't have the expertise to do it. I invest individually in funds run by geniuses who know that business. But I won't try to do that a directly. It makes absolutely no sense. And that's where being a complete generalist sometimes makes absolutely no sense. So it goes back to your original question of, how do you find the right VC? Well, if you're a biotech startup, you need to be talking to a VC who is a biotech VC. They're very specific. You need to talk to someone who is you. You need to talk to a GP who is an MD PhD who now turned an investor and not a founder. Maybe you both worked at Amgen and then you went out to start your own biotech and your coworker went out to start a fund and he will invest in you. That's what you need. You don't go to
pretty
me, a
much.
guy with a
Yeah,
math degree and who's worked in finance and insurance, and say, "Will you invest in my biotech startup? I'm curing cancer." It's like, sorry, I have no way to vet that. It doesn't work. You're talking to the wrong person. You need to talk to another biotech researcher who happens to be running a
brilliant.
fund.
Yeah. I want to touch upon the last question. And when we spoke before we started the recording, we spoke about AI, and you invest in a lot of other emerging technologies. But everyone is on the bandwagon of AI, AI, AI. If you don't have AI, we don't want to hear from you.
Right.
obviously there are other things that are happening in the world except AI that are very investable. I'd
Hmm.
love for you to share with the audience what else is going on in the world, in your world, that you're investing in, so our
Right,
audience can listen as well.
right. I mean, it's true that nowadays every tech startup, or maybe even every business, is going to be an AI startup. Just like every business is an internet business, and every
Right.
go back 30 years, every business is using a database. That was a rare thing, originally, and then so was the internet, and it's just ubiquitous. Every startup is going to be an AI startup. Period. They all use AI. It's impossible not to. And so, um, other emerging technologies that are very interesting right now that are just coming through and becoming ubiquitous, things like wireless energy transmission. Um, it it's starting to be everywhere. You're starting to kind of see it creep into everything, but it's behind us. It's going to be automatic soon. Electricity is going to be in the air the way Wi-Fi is in the air now. The way data is in the air, electricity is going to be in the air. Wires are going away. You won't need batteries on your devices because electricity will be in the air. And we have a portfolio company from, I guess, 4 years ago, 2019, in Fund One, that's Canadian, that is doing wireless energy transmission. They started with industrial applications for solar panels. I've looked at many, many others over the years. They were smart to start with industrial because it avoids all the FCC requirements. It avoids worrying about the waves being around people. And you would freak out if you walked into a conference room and knew that it's a fully electrified conference room and your device is being charged. It's like, wait a minute, there's electric waves going through me right now. And what is
Right.
it doing to me? And you have to prove it's safe. So anyway, that's one. IoT becoming prevalent, so small sensors everywhere is becoming a thing. Obviously, augmented and virtual reality are a big thing, and it's creeping up on us, as is the metaverse. It's kind of had a lot of false starts, like every other technology. It kind of jumped ahead of itself. There's a lot of great startups that were just a decade too early, and uh, it's going to come back, and it is coming back, and it's a big thing. And combined, especially with generative AI, what they can do now, uh, to overlay augmented reality is just going to be amazing. And it's going to change everything, and we're going to walk around with some version of another of, like, your directions. You'll have a digital layer on top of the real world all the time eventually, in some
Right.
form or another, from some vendor or another. And it's coming. I mean, all these things that are coming, I guess one good saying is the future's already here. It's just not equally distributed. All these things already
Okay.
exist. If you know where to look, they already exist, and people are using them. It's just the masses haven't gotten to it yet. And the same
Out of the
thing
way
with
right now.
robots, drones, with other complete automation. So level 5 automated, which is again use of AI, but level 5 automated drones and drone swarms doing all kinds of cool things, from package delivery to cleaning your windows. I mean, I no more getting up on
You don't have to
ladders.
hang out people on skyscrapers anymore, right? It doesn't make sense.
Exactly,
If you look
exactly.
at that, 50 years from now, people won't believe that we hung people
Yeah.
200 meters above the air, above the ground to clean windows.
I mean, lab grown meat, lab grown fish, all the lab, those things are real. They're out there just getting the cost down, but they're getting there. They're getting a lot closer. Synthetic biology in general is a big field. There's another Fund One portfolio company of ours that actually went on to raise a Series A and B from Sequoia after we invested. They're making biodegradable plastics out of organic waste matter, and there's other competitors. There's many of those out there. So they have pilot programs with Fortune 100 companies. When you go to buy a 3-pack of shaving cream in the market, the the plastic it's wrapped in to close them
Right.
is already, I think today already, with some brands. I won't mention the brands, but there's some brands, or big brands, that plastic's already biodegradable. It's not actually plastic. It's made from it's a plastic-like substance. It's not oil-based, and
It's super
that's a
interesting.
big one. So there's so much going out there that has absolutely nothing to do with AI as you think of it. So from synthetic biology to wireless energy transmission to lab-grown meats
Reality. Yeah.
and everything else in between. And it's being applied to every industry everywhere. Yeah, you can see innovations from, like I like to say, is that we invest in emerging technology, and startups are using emerging technologies in every industry from ad tech to ag tech. So from advertising to agriculture,
That's right.
and everything in between. So um, uh, yeah.
That's brilliant. Um, well, to everyone who is tuning into this episode, I think that now you know why I said it's going to be a super interesting conversation. Um, you can find David Mandel on LinkedIn. Again, he's the managing partner at Emerging Ventures Capital. And to all of you that are tuning into this episode of How to Sell Your Vision, thank you so much for listening. I hope you enjoyed today's insight. You can tune into the other episode as well. And if you want to hear more insight from me on how to craft your investor pitch, your storyline, you can also follow me on Medium at Moti Elkaim. David, thank you so much. It's been such a fascinating conversation. Really, thank you.
Thank you, Moti.